We have both crypto and the stock market in a very, very precarious place within this point in the market cycle. And this is going to be a big week for the markets. In today's show, I'm going to have a look at one of the key things that most people are missing. Most investors, most crypto traders, they're not having a look at this one key thing, which we're seeing as a bit of a warning sign. But again, a precarious moment for the crypto markets. It really could go either way at the moment for the bulls and the bears. And it's all going to most likely be led by this major event, which is the FOMC coming out later on this week. That's going to be on Wednesday. Make sure you mark that off on your economic calendar. Smash the like button, hit the bell notification, and subscribe to the channel. And that is one thing that all eyes should be on, is of course coming into Wednesday, but it's not the precarious thing that's occurring within the markets. We'll talk about that in a moment. Remember, the FOMC is all about what's happening with the inflation and what the Fed's going to do in terms of their next interest rate hike or cut, right? If we look at the spot price of Brent crude oil, well, it's come down significantly, and usually this is a good indication that inflation is somewhat coming under control. And if we look at the US trueflation numbers over here, the inflation is down to 1.45%. Remember, the Fed's target rate was always 2%, to get inflation down to 2%. But we said that they're always trying to overshoot that target. So that's why they could still keep hiking, even though it's come down to below 2% on trueflation, because inflation does find a way to tend to bounce back. And if you look at the target rate probabilities on the Fed Watch tool over here, well, you can see that currently 94.8% probability that they're going to keep the current target rate at exactly the same place as what it is right now, right? So we're seeing the stock market coming into resistance. We spoke about that. We had a look at the potential short trade setup. We'll review that as well today. Fear and greed coming down from what was in neutral territory last week, now into fear. And this was the short trade, right? That was the setup. The one good thing is, if we highlight over here, you can see that you have actually breached that on a closing basis, right? So the RSI has broken that downtrend, which is at least one good sign, a little bit of optimism for the bulls over there. But again, the one thing that most investors are missing is this. They're not paying attention to the volume, right? Price rallying up off of low volume can be an indication, not always, but it can oftentimes be an indication that it's simply just a relief rally coming into resistance, and you're going to at the very least pull back. So that would be the outlook leading into the rest of this week, is at the very least some sort of a pullback over here, allowing price to put in a high low, and then we can reevaluate. So that's the current short trade setup over here. Risk to reward wise, it makes perfect sense, because of course you have your highs, you have your lower high, you came and you printed in a lower low, and this is exactly where you would expect to put in the lower high, and that's based on that golden pocket over there, right? The 0.65 to 618 fib level. And we said we need to see sustained price action from the bulls above 5,700, which would mean above the 200-day moving average. If you can sustain and hold and maintain above that level for a couple of days, chances are then maybe you won't put in a pullback, especially if you see that occur with rising volume, which is not yet the case, right? Right now, as it currently stands, low volume coming into the key area where you would expect a rejection to take place, even though Friday was actually a pretty strong close. So today's going to be very interesting for the markets, right? And part of the reason why you have to play out that probability of how it could reject over here is it just makes risk to reward sense. If you look back at what happened on the NASDAQ in 2022, which led into this mini bear market, it was very, very similar, right? Coming into the 200-day moving average, put in that rejection, and you actually went in for quite a lot of downside. I will remind you that coming off of this rejection over here on QQQ or NASDAQ did actually create the bear market as well for crypto, right? The crypto bear market leading into those FTX lows that occurred somewhere hanging around this position over here. So very precarious place for the markets. I'm going to again show you why in a moment it's such a precarious place. You're really caught between a rock and a hard place. It's really on a knife's edge, both between the bulls and the bears. Any one of them could take it. And you're seeing over here mixed signals, right? Well, one, you're coming into key resistance, you're coming off of low volume. That's one tick in the favor of the bears. But if you look in favor of the bulls, well, you have this, as Ryan says over here, 87%. There it is, 87% of the S&P 500 stocks are now above their 20-day moving average. 52% are making 20-day highs, which is usually a bullish sign. And he says these aren't really things you typically see in bear markets, right? Instead, you tend to see bullish continuation, early phase of bullish continuation. And therefore, that's a tick in the bull's favor, right? So what's happening in the rest of the markets? Gold over here, we still said that that's potentially a major top on gold. Now, it's not to say that you can't come back up and test some of that inefficiency. Remember, moving back, we like to target about 50% of that wick. That will take you to about 3,400 on gold, where you could set in a lower high, and then we're looking at continuation down. So still waiting for the proper break of structure. We need to see this play out. We need to take out that 2,956 low in order to confirm that you've broken structure, create a low, and then the lower high will be the major shorting zone, right? So if you are looking to take this trade over here, please do remember you can do so on Bybit. You can actually claim up to a $30,000 sign-up bonus. Use it to your advantage over there if you do want to actually short gold. So will Bitcoin play catch up? Remember, this is the current cycle, is the purple one over here. We eliminate the blue one because there's a diminishing returns as the cycles persist, and we'll eliminate the second one. So very similar to what's happening in the price cycles. If it is going to play catch up, this would be the environment where you need to see things start to move parabolic. And could Saylor ignite that, right? Well, he's been buying a lot near the tops again, right? So essentially the size of the orange circles over here essentially showcase how big his purchases have been. So that's the most amount of Bitcoin that he bought right before we put in that peak at about $109,000. And he says too much blue, not enough orange. Whenever he says that, usually it's going to be announced, should be today, because he posted this yesterday on May the 4th. It's going to be announced today, bought again. Every single tweet that he's ever made like this means Saylor bought again. So right now, he's the only real bid in the market, right? As per retail, there's still no retail interest. There's still no retail bid that's coming into the market. He's now raised his average just shy of that $70,000 mark. That means his average buy is about just under 70. Call it 69,500 is Saylor's average buy, marked by that green dotted line. So even if he were to persist the bid, even if new market participants were to come in, this is the environment that you're looking at over here. You would then be printing triple bearish divergence. So best case scenario, obviously, is that you run it all the way up to here, about $132,000, depending on when it hits, right? Of course, if it hits in one candle, within this next month, then it would be $125,000, and you'd find resistance over there with your RSI coming into that bearish divergence, right? Triple bearish divergence. So that's one thing to be aware of, but this is much higher time frame. It's not going to play out today. This is over the next 3 months, I would say. That's kind of what you want to have your eye on, is over the next 3 months. If prices do put in new all-time highs, that's one thing you need to be aware of. Now, the precarious place that price is in is this, right? Why? Well, one reason is because you're getting a nice turn over here of the money wave. The momentum oscillators on the high time frame are not looking too bad. You have a blue dot and a green triangle. Usually this historically does mark further upside, which could mean you'd lead to continuation. But if you go into the other time frames, like the 3-day, right, and below, these are showing that things are a little bit overbought in the short term, and you need to be putting in a bit of a pullback, right? If we go into the daily as well, you can see the same thing, right? We have actually bearish divergence on the daily, price putting in high lows, momentum oscillators starting to roll over. And I think that goes all the way down even onto the 4-hour time frame, where you're starting to see price cool off, right? Here's your 8-hour, still got a lot of momentum towards the downside. So I think Tony the Bull, I mean, he's literally called Tony the Bull, which means typically is bullish. So when Tony the Bull says price is in a precarious place, then you should probably listen, right? Why is it in a precarious place, right? Well, one, if you're looking at the daily momentum oscillators, this is focusing on the 𝗪𝗪𝗪𝐷, which is kind of like a leading MACD, right? So it's like you're looking at the MACD, moving average convergence divergence indicator, but with a leading edge. What he's telling you over here is if the daily momentum crosses back bearish, that might prevent the weekly from crossing bullish. And if you prevent the weekly from crossing bullish, you're probably going to get the monthly crossing bearish. Now, when you cross the monthly bearish, this usually has high time frame implications where you could be looking at much further downside. And that's why it's in a precarious place, right? Because price is caught right on a knife's edge, where both the bulls and the bears have the opportunity to take control over here, right? And the monthly is the most dominant indicator that you want to look at. Now, some good signs, right? This is using the normal MACD, not the leading one, but the normal one. We are seeing that it also wants to cross bullish over here. But what's more important is where's price? Price is above the yellow 21 weekly exponential moving average. And which way is it angled? Key point. It's angled towards the upside. Generally speaking, as long as price is above it and it's angled up, that is long and strong, right? When price is below it and it's angled down, that's a risk-off environment. So the question is, who is going to get trapped here, right? Is it going to be a bear trap or is it going to be a bull trap? Right now, as long as price maintains above this level over here, and as long as price, I would say, defends that this big candle that occurred towards the upside, which is your week of the 21st of April, that low. As long as you defend that low, chances are that this is going to have been a bear trap. Bulls will maintain control and price will head higher. Not only that, but you've broken the stop and reversal indicators, which were trending down. You can see over there, that candle last week broke it, and now they've popped below. So if you look on some of the other time frames over here, that's what you're looking at, right? You don't want to get this monthly cross towards the downside. And if you can maintain the bullish posturing, again, I want to highlight this chart over here. This is your potential upside, right? I wouldn't really be looking beyond this point over here around, there's going to be plenty calls, $400,000 Bitcoin, $450,000 Bitcoin. But if we do make it up to this $125,000 to $135,000 level, that's kind of the area where you want to start to take all of your profits off the table, in my opinion, right? Very few people use that terminology, but I would say all of your profits, right? You got your Elliott wave count, wave 1, wave 2, wave 3, wave 4, and this would therefore just be an extended wave 5, right? You can continue that onwards and upwards. We were saying, well, we're debating, is this the end of the fifth wave? Like, let's go over here and just quickly zoom in. Is this the end of the fifth wave? And we can turn some of these things off. Let's turn that off, and we will highlight that a little bit bigger. Is this the end of the fifth wave and the top is already in and we're putting in a complacency bounce? Remember, that's still possible, right? Why? Well, this is the precarious place that price is in. If this daily starts to come down, the weekly keeps going down bearish, that will cross the monthly down, then that is the current positioning. So why do you want to be really, really careful? What do we highlight on the stock market over here? The one thing that most people are not paying attention to, which is the volume, right? The volume, which has been diminishing, price rallying into resistance with declining volume. Well, we're seeing the same thing over here on the daily exchange volume, 7-day moving average coming down, lower lows, lower highs over the course of the weekend. This kept turning down, right? If we look at the liquidation heat map, and it doesn't matter what time frame you're really gone, there's very, very low liquidity, a little bit more liquidity towards the upside than the downside. It just tells you that there's not many people that are taking a position in the market right now. So very, very, very low volumes over there. And you can see the volume declining with this chart over here. And everything is playing out according to what we highlighted could happen over the course of the weekend, which was this, right? If you have a look at the parallel channel coming towards the downside, we highlighted and we said observe and watch as price rallies into this green zone over here, which was the 0.65 to 618 level. That was 97,176. And we said, watch for a slight deviation above and then a potential drop and close below. Now you've got that, right? That is the deviation, which could become a bull trap. I discussed this with Eric Crown on the show on Saturday as well. And now you have your first candle. This would be the second candle close below. Now, how bearish would things get, right? If you do put in this pullback as per the poll that we have today, would it be a healthy correction or is it doomsday scenarios? I lean towards a healthy correction, right? If you do put in that pullback, I'd be looking at price to find support around $86,000 coming into this little fair value gap over there. I think that will form a high low. We planned this months in advance actually already, where we said, watch for the potential inverse head and shoulders formation, right? So you would have over here your left shoulder, you'd have over here your head, and this would simply be coming in to print your right shoulder as a high low, right? A high low over there, maybe new volume comes into the market, and then you lead to continuation higher. So again, precarious, confusing for those that don't know what's going on in the markets and they don't understand probabilities. But for the rest of you who are very, very wise over here, you understand these are the current probabilities at play, which is why we spoke about looking for longs from the lows and then looking for head shorts from the highs. And that way you have a risk-free trade, move your stops to break even, and whichever one becomes the next breakout move, true trending move, you're adequately positioned on both sides, right? And this is an indication that a big move's coming. When you see the volume diminishing like this, right? But the drops are becoming less, right? There's a slowdown in momentum. So each of the relief rallies over here with volume coming in were higher, right? Look at that. Less of a pump, less of a pump, less of a pump. But the dumps are also less, right? Less of a drop, less of a drop, less of a drop. It's compressing. Compression leads to major expansion within the markets. It tells you something big is about to take place, right? So the next move that does happen is, let's go back to this chart. Either it's going to take you all the way up to this 130K region, or it's going to drop you down into bear market territory. You know, $40,000 Bitcoin price would become a possibility at that point. So you want to be adequately positioned. And the best way to do that is to look for the trade in both directions, right? So pullback levels again, where did I get that, you know, that 85K region? I would say if it came down into the golden pocket over here, I'm not even convinced that you're going to get there. My base case would be probably into the 0.5 level. That's taking our fib level, anchoring from the low to the high of this move over here, and 50% of the way through, we expect would act as support, and that's $86,000. If it got a little bit more extreme, then yes, you could drop down towards that 83K region. But I firmly at least expect that you should be putting in a high low. But again, we always want to take things from both the bullish and bearish perspective. Now, what the bears have going for them over here is a lot of the savvy traders will be highly focused on this. What is this over here? Those are equal lows. Equal lows equals liquidity, right? When you see something like that, equal lows equals liquidity. That tells you liquidity. It could be ripe for the taking, but I'm still leaning towards a high low, and I think that that level will hold, right? So that is the, again, this is going to take a couple of weeks to play out. That's the plan of action. We're still firmly in the bear moon over here. So the bear moon hasn't done a proper job yet. But if it does, it would drop it down to about that 50% level. And then you're going to print your next bull moon on the 12th of May, right? The 12th of May. And I expect that probably this is going to have a lot to do with what comes next within the markets. Okay. One of the easiest things to look at, which we've been governing the short-term moves with, especially in whale room, is we've been looking at this, right? Simple range over here, range low, range high, range low, range high, and each deviation of this range, which has been highly respected for the USDT dominance, has created the next little move, right? So over the course of the weekend, you know, I said over here, look for long trades. Price came down. I said, look for short trades to take profits on the long trade. Price ran up. Now, basically, you can look for, again, short-term long trades. And this is how you build those hedge positions, right? Using something like USDT dominance. We're waiting for the confirmed either breakout or breakdown to determine the next directional bias. But I do want to remind you, when you do zoom out, and we'll go on the daily time frame, this did break out or broke down from a parallel channel, right? That was rising. And now it's creating this massive bear flag, right? So on the lower time frame, those are just the levels that we're looking at between those two zones of there. That is 4.98% up to 5.16% for the short-term moves. Keep monitoring that. So we've got all of our trades on the table over here. We got the SUI, the Solana, the ETH, and the cross-margin trade over there, which is a hedge trade on Bitcoin. Pretty much up on everything except ETH, but I think that that could turn, right? So if you are following along with these, please watch the show every day, because there'll come a point where I'm going to manually stop these, and then we're going to reset the bots. This is on Pinex. If I stop the bots on my side, it's not going to do it on your side. You can only copy them. You would have to manually stop them yourself. So make sure you stay tuned in each and every single day as we do follow along with these. I'm going to be looking to take a few more. We're waiting for this next pullback before I open up the next trades, and they'll be there for you guys to copy. So links are below, right, for Pinex. If you want those and you want to automate your crypto trading journey, this is an easy way to do it, right? I'll set them up for you. You can also set your own ones up if you do want to. So ETH, let's talk about ETH, right? There is something coming up for ETH. The long-awaited Ethereum Pectra upgrade is going live next week, right? Not like the what was it called? The Denken. The Denken upgrade was the one that pretty much crushed ETH. That was a major sell the news event, and ETH has been nothing but down since the Denken upgrade. Maybe the Pectra upgrade will be a little bit different. I prefer to let the charts do the talking and have a look at the technicals And there are some things going on over here, right? If you look at Michael's post over here, and he's looking at the 𝗬𝗏𝗲 score, which we commonly use with Bitcoin in determining major tops and bottoms, especially when it comes to bottoms, it tends to work very, very well. Well, what we're seeing over here is we back down to the same levels from August 2022, the COVID lows, January 2019 over there, and you got it coming all the way down over here. This has marked all the major lows on ETH, right? Also, we have this, highlighting every time the RSI came into this trend line, it did mark pretty big bounces, and also this is your range low. So approaching the range low, could you sweep it? It's very possible. We've missed it by 6.4%. The sweep of the range low on the ETH BTC chart. Either way, this is a parabola. Parabolas tend to break, inverse parabola, so you'd expect it to break towards the upside. And in the short term, every time ETH is coming down into negative funding over here, so when you see the little red bars on the histogram, that's your negative funding. Every single one of these have marked little bounces, right? And all you're trying to do is you're trying to utilize this to time your entry to potentially catch the next big trending move. You've got the golden cross on the 4-hour time frame between the 50 and the 200 EMA, and it seems to be respecting that. This is now your next test into that level. But the daily level is the one that it's struggling with, right? If you can start to see a daily reclaim of the 50 EMA, which is the red one over there, then I expect a bit more optimism to come into the market for ETH. And maybe it just lines up with this, right? May the 7th, which is coming up in 2 days. Maybe they consider that to be a bullish upgrade and something positive comes from that. The Denken upgrade was one of the most spoken upgrades, right? Everyone spoke about it. No one is speaking about this particular upgrade over here. I don't even know the name. You see, we have to go look at it again. The Pectra upgrade, right? No one's speaking of the Pectra upgrade. It's the first that I've seen. So if you can start to get back above 1870, that's going to bring a little bit of optimism for ETH. This is still a downtrend. Don't get me wrong. The trend is your friend till the end of the trend. But eventually, those trends slow down. Lower lows, lower highs, right? Possible lower high over here. But then we expect still, even if you do something like that, a high low, you're going to find major support. So that's ultimately what we're looking at for the current price chart. And this trade is theoretically still valid, right? You can see it's been respecting that 1750 region for quite some time. So let me know in the comments if there's anything else that you guys want to have a look at. That's what I wanted to run through today, specifically the plan for Bitcoin, the plan for ETH, if there is a chance that ETH does start to reverse trend over here. Of course, we always want to position as early as possible, right? So we're trying to get in as close to the bottom on the ETH BTC pair as possible. And this has been a dangerous one to call each of the times because it just keeps going lower. But you still get pretty big bounces with this RSI retest, right? Which is something considered or something to consider and to look at. All right, we need new dumb retail money, says Danny Boy. Absolutely, but they haven't been here. That's the truth, right? We just haven't seen any retail come into the market. And that's kind of where the troubles come in, right? If we go over here to YouTube views, this has just been an institutional bid market-wide. Like, look at the YouTube views, right? So what is going to bring the retail? That's the question. Like, the Fed might cut interest rates. They might stop quantitative tightening, but are they really going to do quantitative easing? That's the thing, right? You kind of need this form of quantitative easing to get the market running. I know a lot of people looking at the M2 money supply as a leading indicator that's been breaking out. It's fine. It probably works half the time. You can look at that. Trend is the most important thing. Price does have the opportunity to put in an uptrend again, right? So, this has been your first major marked move since the downtrend. What did you do? You did something like how many days of downtrend did you put in over here? You put in about 80 days, right? This downtrend lasted for about 80 days, and this has been your first major move up. So the safest entry is always once you establish a proper uptrend, which would be multiple higher highs and high lows, right? That establishes a trend. This is really only your first major high that you've created, your first major high. You haven't even put in a high low, right? And people act like you've missed everything. So that's what you need to look for. That's what we're waiting for over the next coming days. And I think that is it from me. Thank you all so much for watching. Appreciate each and every single one of you. Again, if you want to copy the bots, the links are below to Pi Next. We'll be opening up a couple more. There is a sign-up bonus there as well, by the way, $1,000. I'll see the rest of you on the next one. I hope you all have a lovely day, and we'll catch you soon. Cheers for now.